Okay, good morning. I'm gonna turn the volume down. I watch, delete, and then, oh man, am I not live? Your channel, there I am. Hit the thumbs up button. There's nobody watching, so I don't know who I'm talking to. Let's see. Pre-market movers. LHDX. Let's look at LHDX in Active Trader Pro. So, do you have an opportunity to get into LHDX? Let's see. I'm going to zoom this in a little bit. And we're going to pull this back a little bit this way. Boom. Oh, come on. Man, it ain't moving back. There we go. We're in a green candle above the 9-day. Ooh. We have a little bit of a triple bar coming, which is, so this is a opened at 40, high at 50. That's a big percentage. Low of 39, high of 50. Yeah, you got a triple bar moving. I would try and nab it under 50 cents. If you're gonna play LHDX, nab it under 50 cents. It's a micro cap. Let's go over to Safari. I want to show that though. I go to Finviz and move this over here. LHDX. LHDX, it is a falling knife. It's got shares floated, 36 million shares. So far today, it has traded 29 million shares. So 12-day volume is 12 million. Let's see, this candle you got down to 52, and you're at the low for this candle. But it does look like there might, I mean, this one is, the red dipped a little bit below, but wow, you got green, red, big up moving green outside the Bollinger Bands here. But, oh, you're not seeing that. There's the Active Trader Pro screen. You're moving. You're moving. So we'll come back. I say, grab this one at 50 cents. It's got bigger short interest than 4%. Finviz is saying short float. Let's see. That was as of 131. You're at the end of, morning, Joe. You're at the end of February. There's a lot of short interest in this one. Let's see if anything. They announced FDA authorization of first and only at-home combination COVID-19 and flu test kit. And you're seeing a ton of retail traders get into this one saying 400, 173, blah, blah, blah. Well, get it at 50 cents. God, I got my summer. I'm 52 years old and I got summer zits showing up. Welcome to my nightmare. Fuck. Hold on one second. I got to start the podcast. I haven't scanned yet, though. So if you just got on, I'm just starting scans. Just starting to get settled. I haven't been on for very long, so. But this LHDX does interest me a little bit. You're down under 50. This candle's not super confirming. There's puppies outside. Aww. I'm waiting for mine to erupt, seeing the dog outside. All I have to do is say, "Who's that?" in a tone. What's this dog doing? What's this dog doing? What are they doing? What are they doing? You see the doggies? No, stop. Stop. Sorry, morning, Zephin. I got there is an old Indian dude, looks about 80, in sandals, in his PJs, walking two dogs without a leash. No bags or anything. Nothing of the sort. So we'll see what happens. I wonder if they're pooping and peeing. I should probably go outside to scare the fuck out of them, shouldn't I? What are these dogs doing? Hold on. I'm going to be right back. Okay, we got World War III going on around here now. Oh, man, I walk out there. Let this be a lesson to anybody who has dogs. Do not walk your dog without freaking bags. The fucking guy, I gotta see where he goes. I know he's going down. He's walking them without a leash. I should take a picture. Let me see if I can see where he goes. Going down. I don't know which house he's in, but the fuckers pooped all over my backyard. Ugh, I hate that. I hate people like that. Giving dog owners a bad name. Oh, sorry. Probably shouldn't have come on and gone off, but okay. It'll take the dogs a little while to calm down. It'll be good. It'll be good. Brokerage holdings. God, I just don't like... I didn't do a Netflix video. Square passed up. Devin passed up. I am that dude, fucking Joe. See, here's the thing. I don't mind dogs coming and playing and doing anything, but when you're walking your dog without a leash and they're in my backyard and you're standing in front of my house on your cell phone texting and the dogs are shitting in the back of my yard, and you don't have bags to pick up that poop, yeah, that's when I'm that fucking guy. Give me my vape. Give me my wife beater shirt. I'm ripping it off. We're going. We're going. Core investments. Let's look at core investments. NVIDIA crossed up. We talked about that one. Devon crossed up. Energy names. Let's look at energy names. FANG. Cord. Did they have their earnings yet? They did have their earnings. Let's see. Let's see what Cord said. Did they raise their dividend at all? Missed earnings. Let's see. Total return on capital, 75%. Declared at plus. Variable cash dividend of $4.80 per stock. March 21st to shareholders, March 7th. Okay, we're going to say this. And they are returning capital. So Cord is a $136 stock, giving you almost a 2%, almost a 3%, $4.80. So it's a special dividend. Not a bad price if you were able to time it. But if you bought up here, you know, at 140s, at the 120s, good price. Good time to buy it down here. Could have sold it at the 140s and then gotten it back in at 120. Again, hindsight's 2020, but I'm seeing a lot of green, by the way. There's only one red, Exxon. Oh, but Cord passed up. Let's look at our levered ETFs. Let's see if anything crossed up here. I think Boyle had one last week. Yeah, the guy comes into my backyard and just apologizes. Dude, your dog just shit on my lawn, and you don't have a bag to clean it up? Here's a bag. Clean it up. It's exactly what I did. And the dogs were friendly. He wanted to come inside. Spider sectors. Nothing crossing up on the spider sectors. Let's look at our not owned. This is going to have a few. Square and NVIDIA. That looks like it's it. Okay. Let's look at ARC Holdings. GH, Guardian Health. Right after earnings, they lost $1.17. No, they're not making money. JFrog, I don't even know what that is. NVIDIA, Melly crossed up. Their earnings were really good. $2.50, 6 cents, $3.25. I'm going to bring this up. Okay, Melly, Intuit. Their earnings were good. $1.66, $2.20. You got this gap up here at 441, probably going to get filled. So, fetch, Farfetch. It's losing 25 cents. Altair Engineering. They're down. Bump, 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 bump. I don't like that one. Okay, let's go down to the Dow 30. This week's stock pick, by the way, is Merck. He is down year to date because of Boeing last week. But fear not. I believe this is how he wound up last year when we were talking about this time too. He was saying, we got FANG, we got Intuit, we got NVIDIA, and we have Melly. Okay, NASDAQ 100's all covered. Last year at this time, he was saying about the same thing was, dude, it's not a good year. I'm hurting, blah, blah, blah. My return's not doing well. And then he killed it through the rest of the year. Oracle. And so the way I'm kind of doing this, by the way, is just, I think it does it for the last 5 days. So you're getting some that crossed up already, like Oracle here. MPLX took a leg down. Let's look at the energy sector. And I might start including the financials. But the problem is there's so many financials. And I'm not as good in the financials as I am in energy and tech. Like there's so many energy names and stuff. And they just, you know, on days like Friday and stuff, let's look at finance. I can look at healthcare as well, but healthcare is going to come up with all those little company names. See, I don't even know half of these that come up. Ugh. And it comes up with so many small caps. And I'm you know, again in the, yeah, I got COP. Oh no, it was PXT. Let's look at COP. Let's go back to the strategy tester. Run. You're out of COP. See, timing is the problem. If you're going to try and time it, the good news is that this gap down here at 103 is filled. The difficulty is this gap down here is not filled at 96, nor is this gap down here at 82. If energy continues to just... And I heard this morning, and I think it's one to remember about the energy in particular. And by the way, since you're here, hit the thumbs up button. But it's important to remember about the energy sector in particular. The energy sector is not going down based on anything other than demand. Demand is, you know, the Russian oil cuts didn't all of a sudden, you know, increase demand. Demand is down. It's just China's not opening up as quick as we thought. The U.S. has more in supply than we thought. You know, demand is kind of down here. I mean, I think I passed it was like $3 a gallon here in Atlanta. So it's not soaring, but it's not anything more than just, you know, demand. When demand picks up, you're going to see energy at $100, and that's kind of what everybody's expecting. When we have to start refilling those oil reserves, you're going to see it. Let's look at Boyle. I want to buy Boyle, but not under. I want to buy it at $6, not at $6.50. Although I said that at $6.20 this morning when I was looking at it too. God, I don't want to go out there and see that these fucking dogs just shit all over the yard. That guy doesn't know how to walk dogs. Dogs are walking around outside again. This is my day. Square CEO, Block CFO is on CNBC. Shit, what was that I heard on? She's got her ring light turned up too high. It's straight in her face. These people with the ring light. I should probably show you mine. Let me see. I guess I can't. No, that's my Fire podcast. No, but I mean, Zephin, make no mistake, Boyle will go down and reverse split. I mean, that's just, it absolutely 100% will reverse split. I mean, look at the, this isn't one that you buy and invest in. I mean, that trend lower, this is a monthly chart. Let's touch 3 points. 1, we'll touch 4. So if we assume that that's the trend, and then we touch 3 points up top, if we assume that that's the channel, so we just assume that that is the channel that Boyle trades in, because that goes all the way back to December 2012. And it's a monthly candle. But if we assume that that's the range that we trade in, then you're okay, investing in Boyle here and playing the bounce. This is February 2023. The low is $4.34. The high so far is $7.09. It opened at $6.93. So at $6.50, you're just kind of getting back to February 1st. It's at $6.50 right now. So I don't think you're bad in playing momentum. Just be aware, take your profits. It's not there's no reason not to take profits when you're in this, but you're on the bottom part of this channel, because that midline right there would be, I would be really careful if I was above that midline. And we talked about this last year. It was way up here that it had just. This was the Ukrainian invasion right here, where they were pinching Europe. And prices started to just fly. And we went way up, and you can see it even leading up to that. We went from the bottom to the top. I don't think that natural gas is going from $2 to $8 here in March. I think $2 to $8 is probably from here until September. But the reality of it is, if you hover down near $2 and this kind of just floats here at $2.68, $2.50, somewhere in that neighborhood, this one's going to reverse split. It's just going to reverse split. So you don't want to get caught in that reverse split. You know what? I'll leave that annotation up there, because it'll stay up there for the monthly. We'll go monthly. Look at monthly. Okay, I got enough to go over. We're going to start with SPY. And I'm going to put in some annotations here. We're going to go to a daily. Boo, 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 boo. Bum, bum, bum. Okay, here we go. Good morning. It's Monday, February 27th. And for all of you that were listening on YouTube, if you want to listen to it on YouTube Live, I'm 10 minutes in now? I don't know how far I am in right now. But if you want to listen to it, I was yelling at a dude who was walking his dogs in my neighborhood without leashes on, and the dogs were in my backyard pooping. So I'm that old guy. I am that old guy. By the way, I am so thankful I've got 2 days left of walking 10 miles a day for the entire month of February. So I put in 75 miles last week, 76 miles, somewhere around there. I'll post the whole month, the 4-week, 3.5 week, or however long it was. Journey on the private Facebook group. If you haven't joined the private Facebook group, the link is in the link tree down below. The logo is right below the picture. Go and join. It's free. No cost to you. I am using TrendSpider. And if you're watching on YouTube, this is TrendSpider. I have a link down below, 25% off, DSP25. I give you my algorithm. We're starting out looking at SPY. And what's interesting about SPY is we go back to January of last year, and you had this high, and it was around 478, 480, somewhere in that neighborhood on SPY. And then you get to March, and we kind of had, just took a straight line down to March 11th or so, and we bounced back up to about 462. And from March till May, we took a straight leg down, and we went down to about 390 or so. That was the first time we broke the 4,000. And we bounced back up to 417. Then you go into June, and we bounced down, and we stayed down around 380 for a little while. And in July, you had this nice big rally up to 420. Everybody was saying, oh my God, it's over, it's over. We're going to break the 200-day. Well, you didn't break the 200-day. You used it as resistance. And in August through September, you just slid down to the October lows. And the October low was 348 on SPY. Then through October and through December, into December, I should say, you kind of got up to the 200-day. And you used it as resistance again, and then we slid down towards the end of the year, tax loss harvesting sale. And then in the month of January, you all saw the SPY. It shot up, and in February, we kind of came down. So what does this tell us? Well, there's three basically highs right here in January. Then you see here in March, another high. And then you see here in June, another bounce up. And you see August, another bounce up. And you see December, another bounce up. And then you see January bounce up. Well, a lower high, a lower high, a little bit higher high, but using the 200-day as resistance, a lower high. And then a little bit higher high that just kind of rallied. And now you're sitting right at the 200-day. And again, this is a daily. The 200-day is 393. We're at 396. You're sitting right at the 200-day. So the question is, where are we going? Well, look at the market. You got rising rates. You got inflation that's staying around. You got a Fed that has said they will defeat inflation. They won't make the mistake of letting up too early. So I think you're probably heading down. And that's just a guess. If you use the 200-day as support, and we kind of hang out here for support, then I think you're looking at this 200-day turning around and maybe moving positive. But I don't think that that's the case. And it may just be my skepticism that I'm kind of looking at that. But when you see lower highs and lower lows, this is a higher low, another higher low, another higher low. If this is a low and we kind of bounce off it, another higher low, that would indicate to me that we're probably in the beginning of a quote-unquote bull market, which is where everyone wants us to go. So it's up to you where you think this market's going to go. But in my mind, I think that's the case. So lower highs and higher lows. It's kind of presenting to me that we're in this trading range. I don't think we're going down to the October lows. I know I listened to Mike Wilson this weekend on a podcast about, it was a Barron's podcast, I think. And he is the bearish of the bears. And he doesn't think that we see anything until next year. Just so you know, too, bond rates. So I want to, I'm looking right now at the Fidelity bond rate page. And if you have Fidelity, you just go up to News and Research, and it's fixed income bonds and CDs. And this outlines the current rates of bonds. So U.S. Treasuries, I can buy a 1-year Treasury at 5.10. 5.10. From there, the actual rates go down. That's what they talk about when they talk about inversion. In a healthy economy, the shorter term bonds are lower rates than the longer term bonds. They want to keep you happy for a longer period of time. So the inversion of the 1 year to the 10-year, that's what they're talking about. The 1 year right now is at 5.10, or you can say the 2 year. 2s to the 10s is what typically is. The U.S. Treasury is at 4.83 on a 2 year. It's at 5.1 on a 1 year. So again, you're getting paid more for just holding a bond for 1 year. But the 2s to the 10s, 4.83 versus 3.97. That's less than half. 1%, I'm sorry, 1%. Almost 1% below. So you're looking at a little bit of a quote-unquote broken economy. Not necessarily broken, but the yield inversion of the 2s to 10s has typically preceded a recession. The question is, how big of a recession? I think the first inversion that we saw was March of last year. And when you go back and look at SPY, in March of last year, we were heading, that's where we saw the first inversion, March 14th, I think it was, March 15th, somewhere around there. And we took off and we went above the 200, but then we just shot down. So the yield inversion has been happening for almost a year. That is not good. Kind of not. It's happened before, but again, we're better at economics than we have been in the past, or I should say, market manipulation than we have been in the past. So, question for you is just, where do you want to get in? Where do you want to go? I mean, that's personal. If you're looking at long term, any time is good to get in. I am typically just, personally, I'm staying out of it right now. I'm trading some of the triple levered stuff. I am trading. I'm not necessarily investing. Google is down under 100. It went under 90. It's at $90.28. I made notes. Costco is under 500. Target is reporting tomorrow, so that might be an opportunity if you don't have a position in there. It's just, it's all personal. The weekly stock picks this week, his pick is Merck. And if we look at this chart, it is in a strong upward trend, kind of like Boeing was when that was the pick for the last 2 weeks. He's negative for the year right now, but I was telling YouTube, this is kind of where he was last year, where he was negative. And this year is kind of turning into last year, because when you look at January, we had a strong January last year, and then you just fell off a cliff. And we kind of fell off a cliff, and you're negative now in the year to date. So when you look at Merck, our algorithm had you buying at 105.81. You're at 109. This is one that you probably just want to hold on to. They have a pretty good dividend, and their ex-dividend date is coming up March 14th. So if you buy this week, you're not getting to the March 14th dividend if you buy and sell based on his projections. But it does have a strong bullish uptrend. If you think that we're going up, you're just getting off a 25% gain in this one. Which was the high around 112, 115, somewhere in that neighborhood. So, but that's his weekly pick. mRNA, which is in our core portfolio, and I try and cover the core portfolio as best I can. There was a price target that was put on this on Friday, and it goes down to $93. They're not doing very well when it comes to managing their supply chain. And I saw on one of the big investors on Halftime, Steve, I forget his last name, but he was a big investor in Merck. He got in at $20, and Moderna. He got in at $20 right before COVID, and essentially they developed the vaccine. He rode it all the way up to 400, and he's been kind of trimming ever since. He says he's still in a positive position in this one. He believes in the company, but without the COVID revenues, they're just hurt, and they need more revenues from somewhere else. When you look at the insiders, there's no buys here. They're all sells. In fact, Stefan Bancel, who's the CEO, pretty much almost every day in February, he sold anywhere between 6 million to 7 million to 2 million. On February 23rd, just last week, he sold $6 million worth of shares. So he's been selling millions of dollars per share, millions of dollars of shares every day. So he's the CEO. Kind of makes me think there's something going on there. He wants his billions in dollars. So he's selling every day at these high, quote unquote, inflated prices. Because when you do look at it, mRNA, the PE is 5, which isn't crazy. But that's with kind of all of the governments buying their COVID vaccines. They raised the COVID vaccine. Here it is, SVP Securities. Market performed to underperform with a $93 price target. And that's the most recent monkey that kind of put it in there. And you can see all of these sells from Stefan Bancel. Just go to Finviz. Just look at it. I wanted to bring up another stock where I saw insiders, and it was an enormous insider buy. ET, Energy Transfer. And it's Warren Kelsey. And if you look, Warren Kelsey on February 23rd, February 22nd, he bought $17 million worth of shares on February at $12.99. February 23rd, he bought $21 million worth of shares. That's enormous. He's the executive chairman. That is what, 38, almost $40 million worth of shares at about $13. Today you're trading at $12.86. So they've passed their earnings. They're outside of this blackout period. They've announced it. If he's buying at $13 at that price and that amount of dollars, he sees something in this business. You went from 29 cents a share up to 34 cents a share. He probably believes in energy. When you look at Energy Transfer, let's look at Energy Transfer real quick. I think it's I know they're energy. The company owns and operates 11,600 miles of natural gas transportation pipeline and 3 natural gas storage facilities in Texas and 2 natural gas storage facilities located in the state of Texas and Oklahoma. So read up on them, but that insider buy is enormous. December 9th, Citigroup initiated coverage with a $16 price target. Their average target price is $16.75, and again, you're trading at $12.86. If this is some type of a bottom in natural gas, this might be your play on it. Again, if you're trading Boyle, and we'll go over Boyle in a little bit, if you're trading Boyle, you're just trading on the futures. You're not actually buying something of value. If you're trading an ET, if you're trading an LNG is Cheniere Energy, and they announced and they blew out earnings, blah, blah, blah. But if you're actually trading in these companies, you're actually doing investing. Boyle is just trading, just 100% trading. Ryan from Facebook said he likes CTRA with their $2 billion buyback. So I kind of put this in. This is Coterra Energy. And he likes it. Let's see. 24.41 was the buy-in right after earnings here. You're trading at 25.56. They are buying back $2 billion worth of shares. So Ryan mentioned that one in the private Facebook group. If you haven't joined the private Facebook, feel free to join it. PXD, which is Pioneer Natural Resources, which has like a 12% dividend or something, is currently in a slide. They announced, and I've not bought this one because we haven't had confirmation again, their RSI is at 22. They are under $200 at $196.55. The ex-dividend comes up on March 3rd. If we look at, let me just look at PXD on Pioneer Natural Resources on Finviz. 13.86% is your dividend payout on this one. The average target price is $273. So this is a company that operates an independent oil and gas exploration and production company in the U.S. Company explores for and develops and produces oil, natural gas, liquids, and gas. So it is a favorite of, I think, Joe Terranova, or Guy. I'm not sure which, but PXD is one. Again, March 3rd is their dividend. They are buying RRC, and RRC, which is Range Resources. You can see that pop on that news. Crossed up at 25.40. We're trading at 28.25. Their earnings are coming up today. Is it after? It's post-market. So they'll probably have more news on that kind of offer, blah, 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 the whole thing. Amazon. I was looking at Amazon. I was just kind of going over this weekend core portfolio and where we're at. Amazon, you're not in Amazon. Amazon has the MACD kind of sliding down. The RSI is at 239. It's trading right now up 1% at 94.55. It closed at 93. But here's what I wanted to show you. If we go to a weekly chart and we just look, here's COVID. March 16th, the COVID low was 81.30. You broke that COVID low right here on January 2nd, and you haven't really participated a lot. You're still under this 200-day. You had this death cross right here, November 28th, where it continued to slide. But then you've started to make a turnaround. Now, here's the thing. Amazon is still expensive. Amazon has a cost problem, not a demand problem. They are testing same-day delivery again. They're putting out some additional steps to try and take as far as laying some folks off. They have too much headcount. They're up 1%. I just wanted to point out, if you had basically said, okay, at the COVID lows, I'm going to buy, and you just moved it over here, okay, and you held it all the way through. Look, you're down at those lows. Let's see what this is. We're going to move this. That is a 121% loss if you didn't get out up here. I sold some, didn't buy any up here. I bought somewhere back here. I mean, honestly, I've held Amazon for quite a while, so I'm still positive on it. I'm upset that I didn't sell up here. Didn't see the COVID kind of quote-unquote hangover. Should have seen it. But again, I wanted to point out Amazon. It's not one that actually is, it is the one that I am the most worried about. When I went over 5 stocks last week, Amazon, Apple, Tesla, ones that I would buy and hold for the next 5 to 10 years, Amazon's one that I'm a little bit concerned about. So I wanted to bring that up and just make sure everyone knows it. Now, Target reports earnings tomorrow before the bell. They report. This does not have a MACD cross up. You're out of this. You just got out of this with a 17% gain from the December 27th 143 buy. 17%. You could have sold it up here when it covered that gap up at about 180. I tend to think that this gap at 211 is going to get filled at some point. The question is, where are we going? The 200-day starting to turn positive. If we have a good earnings, again, inventory was the biggest issue for this company. They just ordered the wrong products. I've been in Targets now, a couple of times. I haven't been super impressed with quote-unquote inventory, the store traffic. It's kind of been a letdown. So I don't exactly know what it is. I personally own this one. The average price for me is 111. So I am holding through earnings. If you wanted to buy here, there is a bit of a button hook. Just realize 160 is where the 200-day is. That's where your VWAP is as well, 160. So understand that 160 is probably the support level that if you go below 160, I would say sell and maybe buy at a lower level. Hold on. Dogs are crying. What? You want to go under? Come on. Come here. She's under there. Okay. There you go. My dog just sits there and cries at me. Costco's a good one. Okay. Sorry, dog was crying. Had to pay attention to the dog. Walmart. This was interesting. Walmart, when you go and let's pull it up here. Walmart. Because while their report was okay, it wasn't horrible. On the day, they kind of rose, blah, blah, blah. But what I wanted to point out was the insider sales. Insiders sold over $750 million worth of shares. Look at this. It goes all the way down. These are some of the Waltons, but who typically own. The CEO sold $1 million worth at $140. $750 million they sold at $140. What are they seeing? I mean, you can look over here in December, they were selling at $147. What are they seeing? You can see down here, Jim Walton sold almost, $1 billion. That's what, $600 million on November 30th at 152. That's a lot of selling between 140 and 150. So what are they seeing? I don't know. Stock today is trading at 142. It might be time to kind of look at, hey, maybe Walmart's seeing something that we're not, and the insiders are getting some information, and maybe 130 is probably where this one's going. It's right along its 200-day. Let's go to a weekly to see where we're at. You can see we've risen above the 200-day for all the way since 2017. We've been well above that 200-day. So, but I do see kind of almost a double top here at 150. You can kind of see even back here in November 2020, 152. So right after COVID, you're kind of seeing if I just put this and we look right there, you're seeing a definite trading range between 117 and 140, and you're right in the middle of this. So them selling all of that, I thought it was interesting. Again, you look at the insider sales to kind of determine what do they know that we don't. Sam on Facebook wanted me to look at LFT. This is Lumen Finance Trust. This is a dollar stock. It's a smaller one. The algorithm loses you 33% versus the actual asset for over 1,000 candles loses you 36%. This is a stock that is in a downward trend. I mean, it looks ugly. I would say this is a falling knife. If you want, he specifically asked for long term. I can't imagine this being a long term stock that anybody would kind of look at and say, absolutely, this should be your long term. Because look at that. I mean, it's just it's. Let's go back to weekly. We'll go back to weekly. Why would you ever think that this is a long-term stock to actually invest in from the chart? LFT, let's look at LFT. They have an 11% dividend. Want to know why they have an 11% dividend? They're not reinvesting in the business. This is a finance trust. Let's see what they do. It's a REIT. So real estate investment trust focusing on investing and financing, managing a real estate portfolio. They're basically giving you all of their profits. I can't imagine why you would think this would be a good one long-term when long-term REITs, they just basically pay out their profits to the shareholders. They don't reinvest their dividends. So at 11%, they're just robbing Peter to pay Paul. That's all they're doing. Look at that 200-day. I mean, and it's even moving downward now. So is it good long-term? Personally, I'd say no. I mean, look at a company. You may say, hey, Apple's expensive, but let's look at a weekly of Apple, just for instance, over that same period. See the difference? I mean, you're going from 21 up to 146. Yeah, you're not getting 11% dividend, but you're making it back in the stock. Good companies pay dividends at lower rates because they're putting money back in the business. So LFT, Sam, I'd say no. No, not at all. Pfizer, PFE. We talked about Pfizer being a $50 stock. There's a report today that they are buying CGen, SGEN. This is going to drive the stock down a little bit more. It's down 1% at $41. This is an interesting one because they're supposedly going to pay $30 billion for SGEN. And SGEN is up, I think, 11%, 13% in pre-market. It even has a gap here between 143 and 153. It's going to open up at 182. So you're closing a lot more of the gaps that you see up here. And it's going to trade. Yeah, you're trading all the way up at its 52-week high at 182. So I don't know what the dollar amount works out to be, but Pfizer is going to go down lower. Doesn't mean that you get rid of that one. Just means, hey, Pfizer's going to make some acquisition. And typically acquisition in the pharmaceutical space, it costs a ton. But in the long run, it works out. So Union Pacific, which is the largest publicly traded railroad in the S&P, they're supposedly going to get a new CEO. And they are up 10% to $211. That pushes them over the 200-day. So UNP, again, they just had their ex-dividend date today. So you don't get it. It's going to get pulled out of it today. You're supposed to buy Friday beforehand. So, 200 days at 205. But they're getting a new CEO. That's what it does for you. Let's look at Boyle. Boyle is up at $6.48 in pre-market. I just want to make sure. Yeah, $6.48, $6.49. It closed at $5.96 on Friday. I don't hold over the weekend, so I would have missed out that 50 cents, which is about a 10% gain. I do see a small gap up here at 12. We could be running, but we're heading into summer. We're heading into a lighter natural gas use. Does it mean that natural gas is going from $2 down to $1? No, $2 is a pretty level price for it. You do have to use natural gas to make fertilizer, which they're using a lot of because they're afraid of the Ukrainian war still going further into the summer, that they're going to have to plant crops in other places around the world. So there is some use for natural gas. Just be aware that Boyle is one, and we looked at this on YouTube Live earlier. Boyle is one that is a decaying asset. This is not a long-term investment. This is not one that you basically go into and buy. If you want to buy natural gas, ET, Energy Transfer, LNG, which is Cheniere Energy. But this one, when it gets down too low, it will do what's called a reverse split. Take a look at the volume just in the last 2 months on Boyle. That volume is going to drive a little bit of pricing action in the upward direction, but most of this is sale. You can see on the red, they're just selling more. The MACD is just sliding upward, whereas the price is going down. So it's not a good, healthy investment. A healthy investment is one that actually makes you money. It's ET, it's LNG, it's something you're investing in value. This is just investing in futures. It's a decaying asset. So while you can trade this one, don't think that this is an investment. So I wanted to make sure that you guys knew about that one. Netflix. I didn't go over Netflix this weekend. I'll do it today. I know I promised a 1-minute stock chart on this one. It's a falling knife. There is nothing that is telling me that, hey, we're going to have an extreme bounce in this one. In pre-market, you're up 1.66% to 322. You do have a gap up here to about 331. I don't know that it's going to get fit. Again, we're early in this down stage. The MACD is just, it's just cratered, the MACD. You went from $3.10 per share to 12 cents per share, and you shot up because they announced some type of, artificial intelligence. Who knows? But they do have gaming. Netflix is the leader. They're the only ones in the streaming space that's making money. Your 200 days in a positive direction, even if we go to a weekly. You're not quite at the 200 day, which is at 395. I can't imagine that you don't get up into the 500s at some point in a healthy economy in this stock. This is a very well-run business. Right now, they're just spending a ton of money on production. One of the things that I think is going to be huge in Netflix, and I'll bring this up in the 1-minute stock chart, is if you guys haven't seen it, AI can actually change lips on a person talking. Think about deepfakes, where you can make it say something. You can make it say it in that person's voice as well. Look at the Tom Cruise deep fake that's on, it's not actually Tom Cruise, but the dude is just a deep fake. So what I see happening is something like Money Heist. People that I know, Money Heist on Netflix, great show out of Spain. Squid Games, great show out of Korea on Netflix. One of the things that bothers people is when the lips don't match the overdub. And it's actors from English actors basically talking over their Korean or Spanish thing, but the actual lips don't sync up. Well, AI fixes that. And I think Netflix is probably going to get it soon. They're basically going to get an AI program that fixes the lips, matches the actual speech, conducts and translates from Korean, from Spanish, into English in the actor's voice. So I think you're going to see that in Netflix. I think they're going to announce it. I think there's some type of AI that they're going to put in. And boom, you're at 500. All they have to do is announce AI. That's all they have to do. Okay, let's look at some scans because I'm going to keep this one short. Square. They announced on Thursday, maybe it was Friday. It was probably Thursday. But they're moving. 77.33 is the price on the algorithm here. I don't want to say that you absolutely need to buy this one. Understand that this one does have some resistance up here. You're running into some recent highs just in the last year. You can see if we go back to March of last year, where we've really kind of plunged up above the 200-day. This is a weekly look at it. You haven't made those highs. You've kind of got a little bit of a double top here at 89. So if you buy at 77, realize that I think your cap here is probably 90. Devon Energy, I say buy this one under 60. It crossed up at 55, 54.99, and you're trading at 55.28 right now. I'm going to buy more. Simply going to buy more. The MACD's crossing up. Their ex-dividend date is coming up March 14th. They did announce that they will not be paying as large a dividend. So let me see what their dividend is. I think it was at 9% or something like that. 7.95. So they reduced the dividend by, I think, like 0.1 or something like that. I think it was closer to 8, but 7.95. Just realize, this is a $60 stock, $65. When energy gets back up and running, you're back up here at the 200-day at 65. So anything under 60, I think when you get this cross up, I think you're crazy if you don't buy it. It is a little bit expensive for an energy company. The PE is at 6. The forward PE is at 7. So they do have to grow. Year to date, you're down 10%. That's over 1 year, you're up 6%, plus you got a 7% dividend. So it is rich, but I still like it. I'm still sticking with it in my personal portfolio. I don't mind holding energy because I do think that you come out above. NVIDIA blew away their earnings. They mentioned AI, 40, 50 times within a span of like 2 minutes. That's all they had to do. 232.25 is the cross up. You're trading at 236. You're up. The ex-dividend date is March 7th. What do they have? Let me see what their dividend is. I don't think it's much. It is 0.07. So it's a rounding error, but their ex-dividend date is coming up March 7th. It's a little too rich for me up here. I would like this one under 200. Honest to God, I think you'll have a chance to buy it under 200. It's just too rich for me. FANG, Diamondback Energy, had a cross up here. They've already reported earnings. 141.37 is the cross up. Your ex-dividend date is March 2nd. And they have a 9 or 11% dividend? 2.25, sorry. It's 2.25%. So it's a little bit lower on the energy sector, but it is coming up here on March 2nd. You're bouncing off the 200-day here. I think there's, in my mind, if you're going to buy FANG or Devon, I'd say Devon. CHRD, which is a small cap energy corporation, which was a favorite earlier last year. They had huge dividends last year. They declared a base plus variable cash dividend of $4.80 per share. The dividend will be payable on March 21st to shareholders of record on March 7th. So if you get this March 6th ex-dividend date, you will get a $4.80 plus dividend. And let's see, CHRD, I think it's like 50 cents that they pay. It's a 3% dividend. It's like usually like a 50 cent. So $4.80 is a rather large dividend. You could hold it. It gets taken out of the stock. I would say at 136.26, your top here is probably 143. And then you look to get out of it from here in the next couple of days. 136.18. Again, it's a small cap, a little bit hard to trade. So if you get into it, just understand you might have some problems getting out of it. MELI, MELI, which is the Amazon of Latin America. $1,143.52 is the cross up. They announced crazy good earnings last week. The MACD is crossing up right on the oscillator line. The RSI is at 57. It's a little bit expensive. Let me see if they have a dividend. I don't think that they have a dividend. The PE is 122. The forward PE is 51. So it is quite expensive. Year to date, you're up 36%. 1 year, you're up 25% over 1 year. So they're doing something right. Understand the last monkey that did this resumed coverage, New Street. They went from a $1,700 price target to an $1,100 price target. The average price target is $1,360. The most recent insider buys were from March of last year. Nothing of value. So read a couple of the Motley Fool, 3 stocks to buy sooner rather than later. I think you could probably get this one around 1,100 if you kind of wait for a down day, if there is a down day this week. But MELI crossed up. One that most everybody in the United States will be using at some point in the time. Intuit, which has TurboTax, 416.11. It's trading at 425 right now. It's up 1%. There is a gap up here at 440 to 447 that you could play off of. This is just INTU is the symbol. If we go to a weekly look at this one, you're just hovering around the 200-day. The last time you touched the 200-day was COVID. So it's pulled back to a reasonable price. And when I say reasonable, it is still expensive. The PE is 63. The forward PE is 26. You have a rounding error dividend of 0.74%. Year to date, you're up 7%. Over 1 year, you're down 10%. So I do think that, listen, I use TurboTax to do my taxes. If you do that, that alone, buy this one, make back your couple $100, that you could do it. But Intuit, again, it had a buy. And finally, Oracle. Oracle had a buy in here. It at 87.31. You're trading at 89.29 right now. The RSI is at 55, so you're in no man's land. It's crossing up right on the oscillator line. Their earnings are coming up March 13th, so nothing super exciting. Okay, if you made it this far, go over to YouTube and hit the subscribe button. If you are on YouTube, just hit the like button. But sit there and, please, if you did make it this far, you obviously like the sound of my voice. So I'll do a Netflix look, a little deeper dive on Netflix. But again, if they just mention AI, shit. And if you haven't done this, this is the greatest thing that I think Netflix has over every other. For instance, I will tell you. So I am 52 years old, and Apple, which we all know Siri sucks. So the one thing that Apple could do that is significantly better is Siri. The rest of their ecosystem, I love. The interfaces, I absolutely love. Their AI is horrible.
I will tell you on the Apple TV, when I go into Apple TV and I scroll down and it says shows for you, the number one show for me at 52 years old is Murder, She Wrote. The number two show for me is Golden Girls. What the F is Apple thinking? There is no logic in that whatsoever. The shows that I watch are not like Murder, She Wrote. The shows I watch are not like the Golden Girls whatsoever. Nothing of that makes sense to me. When I go over to Netflix, and I do use the thumbs up, thumbs down on Netflix, but I know they integrate also what you watch, how long you watch it, and things of that sort. They get it right. And when I went into shows for you, anything over 90% hasn't been a letdown for me on Netflix. Shows for you on Apple, absolute disaster. Absolute disaster. I have to try out Google. But I know from a smart speaker perspective, think about it. Even Amazon, you go into Amazon, it says shows for you. What the F are they thinking? I mean, Amazon does a great job on products. On actual shows, it's horrible. And I think that has a lot more to do with, hey, let me promote this one because it has ads in it and we can make more ads. Maybe Apple does something like that too. I don't know what platform Murder, She Wrote is on. Maybe it's on Peacock. But it's horrible. It's horrible. So that's why, again, I'll go into Netflix. If Netflix just mentions AI and says, yeah, we're using AI to try and suggest shows and try that out on Netflix, we're better than anybody else, I think they're saying a true statement. Go and try it out yourself. So I'll do that video in a little bit. But if you did make it this far, go over to YouTube, which is owned by Google. I'm a big fan of Google at $90. There's rumor that the Justice Department is going to file a lawsuit against them for antitrust. You had this ascending triangle. You're down below this 200-day. In my mind, it's just getting unnecessarily beaten up. They'll figure out AI. Yeah, they had a little bit of a letdown. But if you look at Microsoft's details about Bing and stuff like that, plus the cost. If I was listening to some, I think it was the All In podcast, where it will cost them something like $1.10 per search to run the AI versus Google right now does it for less than 2 cents per search. And that's less than 2 cents cost. They're able to put ads in, which actually makes them money. At $1.10 per actual search, Microsoft is losing a ton of money. So, yeah. Interesting. But if you have any questions, hit me up on the socials. Let me know your thoughts. I'm interested to hear them. So have a great Monday. Enjoy. Bum, bum, bum. I'll look at your comments now. And then I got to go pick out some fucking shit from some douchebag who let his dog shit in my backyard. Let's see. Morning, James. Costco's great. Let's look at Costco. Christian, Costco. In my mind, I have Costco in the core portfolio. And I don't think I'm loading up on it right now. But God, right before earnings on March 2nd, I want to see what Target says tomorrow morning. If Target says something, I want to see how it trades today too. Right now it's up almost 1% at 492. It closed at 492.20, it looks like. Well, that's where it's trading at. But yeah, I like Costco. I do like it. Mosaic with spring coming up. Yeah, whether your grandma's making meatloaf is priced in, William. But here, Mosaic buying 51.22. Here's what you have to know about fertilizer stocks, though. Here's what we'll do. Look at that. So before COVID, you were down here at 21. What's changed about fertilizer before COVID that has made it almost triple? How's that? I mean, that's my only thing, William, is what's tripled about fertilizer. Have they gotten better at making fertilizer? Their PE is 5. I know that their costs went up. Year to date, Mosaic is up 17%. So I can't argue that, hey, it wasn't a great trade. 1 year, you're up 13%. I just wonder. It was last year. Here's the thing. Let's see. Here's where it was. This is why it was a favorite. Look, July, $15 dividend. Go back to, I think it was sometime in June when energy was just going crazy. And I think Tom had, mentioned this one to me because I don't look at small caps, but I was watching the energy sector at that time. And that, it may have even, I don't know if it was Tom mentioning it, but I think it was actually the TrendSpider scanner that did it. We'll go back there. Look. CHRD. Right here. July 8th. The scanner picked it up on the energy scanner. 109.81. I don't think it was Tom. I think it was here in the scanner. Because I have it in the energy scanner. If you just go down on here, just to show you, I'm not BSing. If you go to, and you're in TrendSpider, and you use the scanner, the daily stock price scanner, which I can share. Let's see. Share this scanner. We'll copy this. We'll paste it in here. Go to that scanner. And oh, come on. Work for me. CHRD should show up in there because it did have a cross up, but maybe with the candle starting right now, it's not going to show up. Am I holding CAT? Yes, I am holding 1 share of CAT. Yeah, he loved that freaking one. Look, cord shows up. So I don't think Tom picked it out. Tom loved that freaking stock. Tom loved the stock. You look back, go and look. Yeah, go and look back. He loved it here at 150. It's at 136. Netflix is here. I am, Jeff, and just so you know, I do still have CAT, but I have 1 share of it. In fact, I'll update on Webull. Face ID. My Webull account is down at $1,086. Tom was pushing up huge on Facebook. Tom freaking loved that one. So here's Netflix, James. Netflix does have a little bit of a bounce up. It's up 2.89 at 326. If you look, and we go back here, I hope it's going to pull back. I know. Yeah, but I believe I may have led Tom into that. And it was back before that $15. And that $15 share price right there, $15 dividend, when it showed up right before that, I think it showed up in my energy thing. So I don't know if it was a Tom thing. Man, listen, Tom has some good picks, and he's had some good timing on stuff. Here's Netflix. So you had this. This is the weekly. You know what? I want to look at the daily. The daily's where the gap is. So here, here's Netflix on the daily. Okay. They had this golden cross here. You're trading at about 280. And it's back down to about 320. It's on the bottom side of the 9-day. So I'm slightly concerned at this 328 in a short-term perspective. But the 200-day is clearly turning positive. You're just hovering around this 50-day. Oh yeah, Netflix is already up 4%. I think the whole fucking thing's going. Goldman Sachs is up 2%. But yeah, so you've got this gap here between 457 and 506. I don't think that's crazy. At this point, here's what you have to know. The reason for this downturn is because they cut pricing in a bunch of secondary markets. Not main markets, secondary. I'll get in on it at some point. I'm not going to buy it on a day where it's up like almost 3%. But if it goes above that 9-day, I may buy it when it's above that 3%. But I got to see the daily thing on it. James is pushing that one. GNK. Nice chart. Great chart. Great chart. I do find it funny that Tom thinks I plagiarize stuff. Did Tom start his own podcast? I hope he did. Honestly, I hope he did. I hope he started his own podcast. Because my podcast, I couldn't take it. Honest to God, I couldn't take it. Nice enough guy, but I still don't know what he wanted. He wanted confirmation and acknowledgement? For what? For what? I mean, that whole post made my head explode. And I was laughing the whole time. And then I laughed even more when I said, start your own podcast because Anchor pays me as a podcast host. Well, and here's the thing. I mean, the reality of it is, and it started out, he's a nice enough guy. And he would write to me all the time. And honest to God, you guys saw it even in Facebook. You didn't see the direct messages. I don't have time to read that shit. And with his brain injury, I feel a little bit bad, but with his brain injury, those misspellings and stuff, sometimes you just couldn't follow. But again, nice enough guy. And he has some pretty good stock picks. He seems to be a voracious reader of people because he doesn't chart. He's told me he doesn't chart. So I just don't know his strategy. What's his strategy? To read, his entire strategy, I will tell you, his entire strategy is to read something on the internet. And what's our number one rule? Never listen to a guy on the internet, including me. He wants acknowledgement for his stock picks. I say, never listen to a douche on the internet. And he, again, if he doesn't understand the strategy, the point of the podcast and the point of this whole thing is not acknowledgement, not competition, not I'm better than you. It's, hey, do you have a question? Can I help you with something? Hey, you made money? High five. Nice job. It's not, your picks are shit. Which, by the way, if my picks are shit and don't work out, then I'll be, nobody would be listening to me. And by the way, nobody should listen to me. I'm a douche on the internet. But he definitely a strange bird. Definitely a strange bird. And I didn't, it's funny because there's about 80,000 listeners a month on the podcast. And I don't look at the stats. I just see this 80,000 figure. And I don't know if that's true. Who knows? Because the reality of it is, if there are 80,000 and Anchor's right, then getting people over from the podcast, and it's been fairly consistent, so people listen. I know that. But I'm not going to address a situation on the podcast for 100, 120, 150, however many are in the Facebook group. I'm not going to address something that happened on a podcast. Whatever. My friends get a kick out of I got a kick out of it. I thought it was funny. I refuse to be disrespected. I thought it was fun. But I hope he does start a podcast. I mean, if he's got that great of picks and that great of a strategy, and I don't mean that, the strategy of just reading stuff on the internet is bad, because honest to God, that's Warren Buffett. Warren Buffett never looks at a stock chart. He looks at the fundamentals. But the fact that somebody says something on a Seeking Alpha or a Motley Fool, or you read somebody who is, there's an interesting kind of theory out there about stock pickers and actively managed and ETFs. And it goes back to the ARK funds is the great example. The highest performing fund of last year historically will significantly underperform the market in the following year. And the ARK is the best example of that when she got really, really hot. Swapping Tubes is the one that I like. I just like the name. The following year, money just, and the theory behind it, and I need to look this up, the theory behind it is that so much new money goes into the fund when it's quote unquote hot that it's short-term money. Boyle's losing it. It's losing it on open. I'm not good at doing two things at once. No, but I hope he signed up with my link. I hope he did. Honest to God, I mean, I used to get, there were I won't name them, but there's one other person that he used to message like that. And we had some pretty good discussions about, he was generous. He gave me a $250 tip, which was great. Listen, I don't care if I don't like you. You're going to give me $250? I'm taking you $250. You best damn well. That $250, you put it in front of me, I'm grabbing that thing. So obviously I did something for him. You don't pay me $250, if I did nothing for you. Because it's not like, I don't beg for tips. I don't hold my hand out. But then he started publicly, thinking we were best friends. What? And saying that we had all this communication. We did not. And then I asked him, my friend wound up, and I know nothing about medical stuff, but she wound up having some, and she's a fairly well-off, high-level person at Microsoft. and she had her second kid, and she couldn't knock the baby weight off. And this is a woman who fairly into health and stuff like that. So she couldn't knock the baby weight off, and her doctor offered her this drug. And it's a drug, God, I forget what it is. Hey, VRO. But she said, hey, invest in this company. And I have to look it up. I'll look it up before I get off. But essentially, I sent it to Tom and I said, what do you think about this? I think I got 12 messages about how I'm dumb. And yeah, just VRO, man, you haven't been around in a while. I got to look at Zim. What's Zim doing? Zim is one of those crazy ones. You can day trade it. The shippers, I think, have been going crazy, though. Zim is one I think in the past, it's 20% short. I don't know if it's got a short squeeze. Boyle, by the way, Boyle is the most active stock above TQQQ and Tesla. Just to give you guys some hype train here. That is crazy. VRO, I've done fundraising before. It is fun. 227. But I still don't know, by the way. You guys bring up Tom and stuff. I still have no clue. I wish him well. I banned him. I never want to hear from him again. But I do wish him well. I have a feeling that his wow, Snap is up 4%. Did my pins trade work? I gotta look up pins. Hold on, I gotta take out these. I hope Sam's not gonna be upset, by the way, that I put down, is it a long-term trade? Let's see. Oh, you know what I wanted to do? I wanted to look at Finviz. I'll put you guys over there again. You know, let's just publish this one. I'm not going to do promoting of it. You know, we'll just put it up there. We'll just put one up there. I'm not going to worry about. And I'm going to, you know what's crazy? Every time I do Moderna, I get a warning from Spotify about not talking about, but it's here's the COVID facts. And all I'm doing is talking about Moderna. I bet I gotta go and clean up fucking poop from these dogs now. That's gonna piss me off. I gotta write to Sam on Facebook just that I hope I wasn't too harsh. Bob Pisani just said the only reason we're not lower is because of strong tech. So it's clear tech is doing well. Let's see. Okay, there we go. We're just going to put in TQQQ. There we go. That's all I'm going to do. Just one. And then we'll close that. We'll close that. Big Brother is always watching, Christian. Douches. I listened to some really good podcasts this weekend, by the way. Really good. I mean, I'm thinking of listing them just because they were that good. Let's go to Safari View. There is the cord stuff. What I wanted to do was, here, take a look at, what was I going to look up? There was something I was going to do before I get off here. But here, there's Roxanne with her pup. This is what I wanted to do. So on the, no, do not, Zephin. Do not. I don't know that that's a good one. No, let's look at, I'm going to chart Amazon. And I hope I can do it. I think I do have access to a 5-year. So here, this is what I want to show you. This is a 5, if we just look even at 3-year. The blue is the S&P. Okay? So the S&P is up 23% in 3 years. Amazon is even. So you're up. Look at Amazon here. I mean, you were up 95% in December 2021 on Amazon. And you've just continued to slide. So I don't know that. Let's see. This valuation. Price to sales. I mean, Finviz gives you all this stuff too. Valuation F, growth B, profitability A+, earnings per quarter, earnings per share surprise and estimates by quarter. You can see full year 2023, year over year, they're expecting 37%. I was going to do something. I forget what I was going to do. This doesn't have any. Seeking Alpha is good, by the way. See, and here's the thing. Hey, Zephin, you have TrendSpider. So in TrendSpider, set up, if you don't have it, set up that 65-minute algo. Because the 65-minute algo has you in at 519 on Boyle. And you're at 637. Your average win is 6% on this one. So it doesn't have you in on KOLD, I don't think. Let's see. Yeah, you're out. You're out on, even on the 65-minute candle on KOLD. I mean, look, you're at the 200-day on the 65-minute. You're finally breaking the 200-day. And that's the first time under the 200-day since December. where you were at 13. I wouldn't tempt KOLD because KOLD has had this monster run. I just think Boyle is, if we look at the 65 minute, I think Boyle's getting up to the 200 day. Let's see. Yeah, do this. Zevin, do Boyle on the 65 minute algo. Now, 65 minute algo has Boyle RSI at 75. So it's a little bit crazy. Oh, I know what I was going to do. I was going to write to Sam. Let's go into this group. By the way, I know we're getting a little bit more popular in that I had to boot, I think, 5 people from the Facebook group. No. Stop. Why am I going here? Let me see. There we go. So there is if you haven't listened to it, there's a Jon Stewart live podcast where he discusses some of the SEC changes that are being proposed. And some of those SEC changes that are being proposed are one of them, getting rid of Citadel and some of the middle market players that are in dark markets and doing what's called lit markets. Oh, Zephin, you're crazy. I don't think I can share it. Let me see if I can share it yet. I don't think they've set that up yet. No. And I don't think I can share a... But yeah, so to get back to you, Christian, I think Webull is trying to probably get ahead of what the quote unquote open markets are. Here's the problem, and that Jon Stewart podcast is phenomenal with this. They have a couple of people who are on the retail trader side and a couple of people who discuss, they actually have retail traders on the phone who lost. There was a stock, I forget it. Hold on, let me look. Jon Stewart live podcast. There it is. Let me see if this has some of the comments or something. Show more. This is great, though, if you want to watch it. Okay, they don't have anything. If you guys want to listen to this or watch this here, I'll post this here. It is unbelievably good. It is really good. And it's funny. He goes, welcome to the latest and greatest, and oh my God, technology is great. It's what we used to call radio. MMTLP. So for all you degenerates out there, there's the symbol. For all you degenerates out there, just Google that. Just Google that stock. MMTL. Let's see if we have a chart. Yeah, there's nothing in here. It's null. So this is a great example of what's called a rug pull. But the question is, was it really a rug pull? It's legal what they did. So this is a company that basically announced right about here that they were going bankrupt. And so people started trading this. That's a 27% 65-minute candle. 26% in 65 minutes, in an hour. Okay? And it continues to go down. Now, what happened, and this is about December, I think it was right about here when it went down. They announced we're going to have 2 more days of trading. Oh, maybe it was right here. We're going to have 2 more days of trading. It was one of these days. We're going to have 2 more days of trading. Well, they pulled the stock significantly early. And so essentially, anybody who was holding the stock is now sitting there holding something that is worth nothing. They have no money. They have no nothing. It was deployed into a new company that current shareholders did not get a piece of. So this company basically went to zero. And there was a discussion of this is what naked short selling is. So they bought into this company thinking, hey, we're going to buy into this because there's a bunch of naked shorts. Well, when the buyer of the stock or the seller of the stock didn't pass the stock over to the brokerage house that actually bought it, that's what's called delayed transfer or something like that. It just cancels it out. So all of these people who thought they were holding this stock weren't actually holding the stock, but they took the money, and then there's a legal case. So all these people are sitting there holding nothing. So when you trade small caps, when you trade small companies, when you trade these little shares, that is something that you have to realize that, yeah, the big guys have the advantage because they own Citadel. They own the dark markets. They own this stuff, and they can do a lot of stuff behind the scenes that you're not privy to. So there were a lot of people on this particular podcast here that discussed this, went over this. It was great. And it's really a really good listen. It's on all your podcast platforms. You can on the Apple Podcast, on Spotify, you can listen to it. I listen to it on Spotify. I'm going to subscribe. But it really was a great look at it. So 2 minutes ago. Oh, I still have to reply to Corey and stuff. Okay. I don't think everybody's waiting for a reply. But yeah, it was a really, really good episode. So Christian, when you talk about conversion from the process of the orders, there is some some SEC rules that are up for public comment, specifically about getting rid of the dark pools, so that naked short selling and things of that sort would not be allowed in the markets anymore. Wow, pending home sales hit largest monthly increase since June 2020. I talked to 3 people, by the way, and that's big on DRN, the bull, which is probably trading pretty high, I would think. I don't know. Did we get a cross up on this one? Yeah, that guy's a criminal. By the way, Ken, I forget, Ken Griffin, who's owns Citadel, and the All In podcast discussed this a couple of weeks ago. And this is going to be the biggest fleecing of America if it actually happens. But Chamath's hypothesis and theory is that if Ron DeSantis gets into the White House, Ken Griffin has supported him and given him so much money over the years that he will be elected or appointed Treasury Secretary, like Janet Yellen is now. And if you are a secretary, remember, Ken Griffin has somewhere in the neighborhood of $50-60 billion worth of equity in Citadel. If you are nominated and confirmed as Treasury Secretary, he could essentially liquidate. I mean, he has to liquidate all of his quote unquote competing assets. But here's the kicker. He could liquidate the entire Citadel position and it's tax-free. Tax-free. So you want to talk about Elon. I mean, Elon is the largest taxpayer in history. I don't have a problem with Elon, the way that he runs things, the way that he does things. I actually like the fact that he wants to pay taxes. He's very much, I think, like me in that I hate the way the government spends taxes. If you look at where your money's actually going, you probably don't agree with 100% of it. But I would say the large amount of Americans probably don't agree with the large amount of our spending. So, no, I don't think so. Webull, if you've got, and I say this not necessarily knowing, I've got $1,000 in Webull, Christian. If I lose $1,000, my lifestyle doesn't change. If Fidelity were to go the way of FTX, then I'd have a problem. If Webull were to go the way of FTX, I don't have a problem. Think of it that way. That's why, using these smaller brokerage houses and things of that sort, you may be getting additional benefits and stuff like that. I don't think you have anything to worry about, but that's just my sense of it. I don't know that Webull is actually regulated as a bank or anything. I know they have some crypto kind of trading and things of that sort. I don't think you should be concerned. But they gave me 10 freaking free stocks. I don't know what the dollar amount was actually worth when they gave them to me. I think it was like less than $20 though. And I'm still up. I'll tell you what my Webull account consists of. It consists of 2 shares of Caterpillar, 1 share of Boeing, 5 shares of SQQQ, which ironically, I thought I got rid of it. I guess I didn't sell it. I guess it didn't hit the limit order, but I got rid of 5 shares at a loss of 20%. I've got 0.3 shares of Apple. I just put in a dollar amount there. I have 0.07 shares of Procter & Gamble. I have 0.2 shares of Kraft Heinz. I have 0.2 shares of Gap. Yeah, so if you're insured, I don't think you have a problem. But remember, even though you're insured, you'll get your money back. You just don't have access to that money for a good period, I would say, if they do go bankrupt or if they do announce something. I would be concerned if you have a large amount of your money in Webull. I'd be semi-concerned, not super concerned, but semi-concerned. Because, and that's why I went, again, I went with Fidelity. I know TD Ameritrade was fine. I had money with them. E-Trade, I was concerned about before JP Morgan bought them. I think it was JP Morgan that bought one. I was concerned before they bought them. So I took all my money out of there. Merrill Lynch, I wasn't concerned about because that was owned by Bank of America. I just didn't like their business practices. TD Ameritrade, I wasn't concerned about. And I had Charles Schwab as well. And the only reason I pulled out as Charles Schwab was because they didn't, I'm not a big whale at Charles Schwab. Fidelity treats me like a big whale, even though I'm probably not a big whale. I'm probably in the top 10%. Probably not. Maybe top 20%. Who knows? But they treat me like a big whale. Cleveland Cliff's up 5%, by the way. Did you get it under 20? Your boy didn't. We're still out of it. But commodities are taking off. I mean, let's see. Am I up? I think I'm up. Tech is up, so. Boeing, ironically, is up 2.5%. I am up 1.17. Let's see where the markets are. Yeah, the Nasdaq's up 1.45. And the S&P's up 1.18. So I'm performing right along with the S&P. Let's see, I'll tell you year to date. I have until April. Year to date, I'm up 8.3%. Here, let's go to Seeking Alpha. And let's look up Apple. And we'll put in charting. Oh, I'm not showing you this. We're going to look at Apple. We're going to compare. You know what? Let's just put in QQQ. And we'll put in Dow. The Dow. Compare. Okay. So here we go. So your Dow is down 2% over 1 year. The blue line is your S&P, which is down 6% over 1 year. Your orange is Apple. And your, just look at the 3%, 7%, 9%, and 15%. I think you can still see that. I think you asked me this one, Brian, on Friday. I thought I answered it before. So, swing trading is, there's no kind of, hey, what's better? But swing trade, I will tell you, trading in the morning is better than trading in the afternoons. And I just say that because trading in the morning is where all of your volatility happens. And if I go over here and I'll show you, let's just look at, do they have volume for S&P? Let me see, S&P, SPX. Let me see if they have volume here. No. So let's look up SPY. We'll just look at SPY since that's one of the biggest traders in the market. And so down, you'll see these candles right here. Okay, there's two candles. There's a 4-hour. It's a 4-hour algorithm. This is my algorithm, and it's 4 hours. So you have a morning and an afternoon candle, and you can see like this big one right here. That's an afternoon candle on February 1st. I think that was when the Fed was speaking. But then you go to the next day, and that's the morning candle, and then the afternoon candle. Then you have the morning candle. And again, the morning candle is higher than the afternoon. Morning candle, afternoon candle. Then you have the morning candle, which is higher than the afternoon. Then you have the morning, but you had some type of catalyst on February 7th, where the morning was lower than the afternoon. Historically, the morning is higher than the afternoon. Brian, that's doing great. That's awesome. But yeah, just realize the morning has more trading than the afternoon. So from a stability perspective, afternoon tends to be more stabilized because with volume, you have volatility. So Dude, skills? I play Candy Crush every now and then when I'm like waiting in line and stuff. And skills is still advertising as the big, hey, play for money. How are you giving out money to play on games? And it's the most annoying ads whatsoever. You can't make money playing games. Ninja and streamers and stuff do, but they don't make money off the actual games. They make money off of sponsorships and blah, 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 the whole thing. They make money off of their audience. Skills wanted to do that on a large basis, but if everybody's waiting to play the game and nobody's clicking on the ads, you're not going to make money. And here, you know what? Fool. Here. Zephin, for you, I'm going into the paid version of Motley Fool. No, I have to log in. Okay, where do I log in? Okay, why can't I log in? Let's see. There we go. Because the Motley Fool has a very big, they mention skills at its peak. Motley Fool is basically, make no mistake about it. Motley Fool is a more refined version of ARC. Yeah, I did, because they bought, what's the mobile gaming company? And that's part of the reason why I won't buy ATVI is just because they make no money off of me playing freaking Candy Crush. I read at one time, Candy Crush was making somewhere in the neighborhood of $17 million per hour. So let's see, skills. Let's see what the Motley Fool says. Yeah. Hey, Zephin? Zephin, can you read my screen? Let me see if this shows. Yeah. This is Motley Fool on skills. Hold. Overall return. 97% loss. I mean, how do you say hold? I mean, this was where they announced to buy at 33.15. And you're telling me money managers haven't thought to get out? They still believe in this company? Employees, 650. Market cap per employee, 0.4 million. So $400,000 per employee. Gross margin, 89%. Of course they make 89% because they don't do anything. It's just a skills-based game. But yeah. Let's see, recommendations. At one point in time, I'm going to sit here and just go over, let's see, latest recommendations. Take Two, Accenture, Salesforce, Match Group, Under Armour, Warner Brothers Discovery, Vitesse Energy, VTS. What's VTS? Let me look at VTS. I should be doing this more. My dad pays for this. This is a new one. You don't have enough candles to run the algorithm. You do have enough to run the 65-minute, I think, though. The 65-minute algorithm makes you 4.22% versus losing 1.22% in the overall. Wow, look at that run. You had a 10% run. VTS. Let's look at VTS over here. Vitis Energy. Wow, 11% dividend. No insider. February 16th, Evercore outperformed with a $22 price target. You're at, you know what? I'm putting this on the freaking, from Motley Fool. Wow. When's their dividend come out? Let me see. $60 million share repurchase. March 15th. Motley Fool's good. I like Motley Fool. What's RXO? Spectrum Brands, Viatris. I mean, VTS has an 11% dividend. You're getting paid 50 cents. Now, it is a small cap, so you only have 22 million shares. Look at that, though. I mean, that's impressive growth right there. Skills. Hey, Motley Fool says hold, man. Motley Fool says hold. Prosy. Prosy. I don't even see it. I don't see Pro. Oh. It's over the counter. Ignore it, Brian. It's over the counter. I mean, you can trade that one, but it's over the counter. It does no use for me to look at it because it's a company that's just over the counter. Over the counter means that the stock is you know, they don't have any reporting requirements. It's just there. It'll be worthless. I mean, 9 times out of 10 over-the-counter stocks don't move to an exchange. It's over the counter. So you might get charged some fees for trading it, but it's of no use kind of going over it because it won't follow any trend. You can trade it, but at this point it's completely worthless. Tesla. So JR, I haven't talked about it yet today. But there is a phenomenal, if you guys listen to the podcast, The Daily, there is a phenomenal article from an author who basically looks at Elon Musk and full self-driving and goes on a bunch of test drives with some people who have had crashes with their full self-driving. It is a phenomenal podcast, and it's The Daily from New York Times. Just go and look at it. It's called, I think, Elon Musk Path of Destruction. Now that's the 65-minute one. I wouldn't trade, you can trade Tesla on the 65-minute algorithm, which again is detailed in the YouTube video that I have with David Yoakum on TrendSpider. I think it's like 2 videos ago. FYI, the 65-minute candle, 5 years of trading Tesla. If you just use this 65-minute algorithm, you made 4,335% gain versus the actual stock made you 786%. So this 65-minute actually trades significantly better than the actual asset. It will probably get you in on this morning candle because you've got a huge one. Now, in the 4-hour algorithm, let's run this. This is a 2-year look at this. The algorithm makes you 31% versus the asset losing you 18%. You're still in on this buy from December at 119. You've got this gap here between 146 and 155. I don't know why this one kind of comes up here. I've said you're right in between this bottom gap between 147 and 156, 146 and 155. You've got a gap up here between 257 and 264. You're right in between there right now, and you're trending higher. I think anything under 200, you buy it. Anything over 200, I think you can sell it. But the problem that I constantly come back to, and I think Elon took this off the table, they have their investor day to, I think, next week, March 1st, maybe it's this week. But Tesla, in my mind, it's one of the 5 stocks that I've said you buy and hold. You can see it right here. And this is what I've been pointing out to. 82 to 85 is a stock gap way back here. It is almost out of date. That's how far back it is. It is almost out of date. But you can still see you're right in between these 2 gaps. So you're sitting here in no man's land with the Bollinger Bands kind of cinching up. Think of the catalyst. You've got Investor Day where Elon's going to say, oh my God, we've got the Cybertruck coming out. He may even roll out the production Cybertruck, which would be phenomenal. But again, at 207, you're up 5% today. It is the most traded. Yep, it's back up there as the most actively traded stock on any stock exchange. So BOIL looks like it's moving back. Well, it's kind of, it's on the top. It's turning around. BOIL's up 7% today. I may put in a buy for $6.20 for some reason. That kind of sticks out to me as a here. And the only reason I say that, and this is just a guess, but the only reason I say that is I don't know why. Oh. I guess I can't. I guess I can't. I don't know how I did that. I did something on here. Active Trader Pro again. The only reason I say $6.20, look at that little shelf right there. And look at where it bounced off of right here on this one. That was the low 625. So 625 might be a good support level for a short-term trade if you don't break it. And you are at the high end of this 5-minute candle, which has 2 more minutes left in it. But JR, hopefully that answered your question about Tesla. That is one that I have. What does my dad want me to look at? Oh, he's sending me an article on from Fidelity on Tesla. Yeah. aerial footage. They had a drone going over that saw a Cybertruck out driving around California. Okay. It is 10:28. I am getting out of here. I got to walk 10 miles today. I put the podcast up there. If you guys would, just hit the thumbs up button while you're here. And if you have any questions, hit me up. Thanks, you guys. Take care. Doo-doo.